What's happening, guys? Today is March 6th. It is Sunday Scan for March 7th and the week ahead. I hope everybody had a good week last week. Once again, a lot of chop fest, a lot of selling, a lot of gaps and fades and rebounds and you name it, just all over the place. And sticking with that theme of being unbiased and kind of letting things do what they do. But this week, I want to talk about one major thing, and that is the sectors, the themes, and understanding that, commodity type moves are not just one day wonder type events that we're used to. So I'll get into that a little bit, but first and foremost, as always, like the video and leave a key takeaway with the timestamp, and we send out free stuff all the time. So t-shirts for this week, Paper, Archer, and Hunter. Just send me an email, webmaster@investorsunderground.com, with your information and your shirt size, and we'll get those right out. Should be a short and sweet scan this week, just because a lot of everything that we've been talking about is continuing to be timely work. It's been helpful. It's been what I've been dealing with every single week and kind of preparing and how to prepare for that. So I don't think I need to do it again and again and again. It should be, sinking in by now. If it's not, go back and watch the first 10-15 minutes of each of the Sunday videos. It's timeless information. I understand that the second part is usually for the next week, and it's more of a time-based or a date kind of driven thing. But the first part is always timeless, and it has to do with how I'm adapting, what I'm doing well, what I'm not doing well. And for example, this week I'll go over something on oil from Friday that I could have done better, and a mistake that I made personally, the ability to kind of flip the switch and go with it, embrace the chase like we talked about back in 2020. So let's get right into it. First and foremost, last week I tweeted about the oil move and not underestimating how far that it could go. We saw gold. I remember back when I first started to really define and understand and take into consideration that the factors that were creating these moves. Nugget was really the first one that I had seen that was really eye-opening to me. Obviously, I've been trading for a long time, and you see the solar move back in the day when FSLR first went. You had it back with CLF and X the first time around. But the one that stands out to me before gold was definitely that solar move, because it was SPWR, FSLR, and there was one other one, C something, I always forget the name of it, but they all just kept on going. And I remember just trying to find the top, and I'd actually find a good entry each and every single day, and then I'd let them fade, and then it'd be back at the highs. And so Friday reminded me of that on X and CLF, if you guys traded those. Fantastic opportunities, but if you overstayed, they were making new highs later in the day. So all of that kind of comes together because it is a theme, sector-driven type of move. So typically, we're used to these one-day wonders, or maybe 3 to 4 days, because you've got the first day, consolidates, and then you've got the squeeze. But for the most part, these are PR driven, maybe newsletter driven, maybe sympathy kind of trade driven based off of something else, and it's not a full sector move. And when a full sector, a full theme starts to kind of come into play, think back with virus names, right? When COVID first hit and there was all these moves and all this money just came in. All right, what virus name am I going to buy today? What stocks do mask? And just, it doesn't even matter who they were or what they were. If they had even like this much involvement in mask, manufacturing or whatever, they were a target of this entire move, right? And so you had the alt move, you had AHPI, you're just doing like ridiculous, crazy moves. You even had, forget the name, NGY, I think, or something like that, and something. And it was just an excuse to go because there's just such demand, and that demand is on every single dip, right? And before, you've got this, in momentum trading and small caps, you've got this demand that comes and then the supply that comes out, right? When the move happens, the supply comes out. But what's happening when a sector trade comes is you've got this demand, you've got this supply from potentially shorts because the move was too much, but you've got this demand every single dip and it does not go away. And at some point, that unwind starts to come out and you get an INDO situation. So INDO obviously cleared the way and said, hey, it's time to chase every single oil and gas, energy, whatever whatever you want within those sectors. Let's go. And so, obviously my first thought was IMPP, which ended up being fantastic. We talked about it last week on the video from the 74, 79, 80s swing. That was a phenomenal trade. I got out. I felt really good about it, completely unwound the day after. I was thinking about rebuying if oil stayed strong, but I fumbled the rebuy until Friday at like 268, 270s, 275s, and obviously that was awesome. We talked about it going potentially to 350 to 5 on the last video scan that we did, and same idea on Friday into the close, and obviously it worked pretty well. So point being is that when these sector trades start to go and INDO says, hey, it's time to embrace the chase, then you've got IMPP. So people see INDO, they see IMPP, they say, what else is there? And then you've got CEI. You've got CEI that's at 82, 83 cents or whatever it was after hours. And now people start to think 90 cents, $1's next. In their mind, it's not $1, it's once it passes $1, right? So that gives us the advantage of, I'm not going to be in that trade long, but the fact is that most people are already thinking about, well, when it goes back to 5 and 52-week highs, and that's just the way people are that are kind of buying these things for the long term, and occasionally they crush it because that mentality works when you get that sector move. And I would even, or theme, and to give you an example of a sector or a theme would be something like the GameStop, right? The meme sector would be pretty much a theme. So if GME started to, doubled, for example, next week, it would take AMC and BB, BBBY, all those different names that win. They would all have this actual demand, real demand that comes back in because of the underlying theme. So point with all that is then you've got, USEG and MARPS and I don't know, there was just so many names that were going nuts. And it's something that if you step in front of, it's not a good thing to do. And when it swipes, it's a big swipe, and it's hard to recover because you want to, maybe add into a loser, right? Is your first mindset, which obviously is wrong. But when you're in a theme trade, when you're in a sector move, it's not just going to fade right back. For example, IMPP, is it really going to just go right back to 150? Not anymore. Unless they were to raise or do something like that, or bad news, or whatever. There's obviously always that type of risk. But this is the type of move where it has a real trend, real volume. We pointed out the 100 million shares each and every single day. I pointed out why I was interested in that long last week because of how it came up, looking left, and it had been walking down on such low volume, and the fact that it had traded, 100 million, 100 million, 100 million, pretty much made that whole walk down irrelevant. Shorts got trapped, 120, 140s is what the discussion was. And then, here we are on the backside of, or actually still on the front side, but on the next leg, I guess is the right term. So you can see how it just keeps on going down the line. So you've got USO and crude that's just going bananas. You've got INDO that kind of says, hey, you know what? It's okay to chase everything now. Then you've got IMPP, proof of concept, and then you've got what else can we trade off of all these? So you've got the CEI, MARPS, MXC, and USEG, and you guys know how many others there are out there. I don't have to say them all. So just think about that this week, and oil will stay stronger longer than you think. It's fine to trade on the front side. It's fine. There's plenty of opportunities. OXY had plenty of opportunities. CLF and X had plenty of opportunities despite closing at the highs. USO had a great opportunity despite closing at the highs. But you cannot overstay. If you overstay, then you're just going to pretty much exhaust yourself. And that's what we're trying to stay away from. So, I stepped in front of oil, as a reactive trade on Friday. Had a great trade. And then I started to put on a little bit, and it was just kind of grinding along. And I knew that I shouldn't be fighting it. I knew I shouldn't size into it. And so I wasn't. But then we had a swipe midday on a headline and swiped up. And at that point, it still wasn't a big deal for me because I had just started into it. It wasn't an aggressive trade. But then I sized in. And I sized in because, it ramped up, and I figured, you know what, maybe it's the first move's wrong move. It's going to flush out. And I just kind of took almost a gamble-ish approach to, maybe this is what will happen versus, let it exhaust out, let it prove itself, let it, everything that I preach. And so as that happened, it ended up holding. And I said, if it does not break under this level, I'm going to go ahead and move on. And so it ended up consolidating, heading a little bit higher, and I just went ahead and moved on. I took the loss because it's the front side of the trade, and you don't know how thin things are going to be or can be, right? So same thing with OXY. If USO ended up going to 82, I would have been super, super happy. Now, granted, it only went another higher, a dollar higher. I went in the low 78s, and I canned the trade at 79. But yeah, it went to 80, but if it went to 82, 83, 85, I would have been like, man, thank God I took that trade off. And same thing with OXY, where it has that outlier move. You don't know which ones are going to catch and continue to go further than you think. And that's what happened to me on AMC. That's what happened. You've got Kodak situations, you've got DWAC situations, you've got Clove situations. You don't know at what point who's on the wrong side and who is going to have to unwind their position at any given moment. And when it starts to speed up and it makes it look like such a great opportunity because it just was going up $6 and it just went another 2, that next 2 or 4 can come like that. And if you're on the wrong side, that adds up bad and fast, real fast. So keep that in mind. But that said, INDO, we talked about it, and on Wednesday night, put it on scan, thinking that if it held 1350s, each dip continued to hold, as long as it didn't break under that, given the sector, given the theme, that it could probably go 35 to 40. Great call. But I didn't take part in it, unfortunately. I missed the long opportunity. It's my setup, and it was just like LGVN, and it just continued to compound, but I started to have this bias that oil was going to end up pulling back, and so I let that bias stop me from buying INDO, anticipating that 35 to 40 break, which was the entire thought process the day before, is what it is. But I saw a lot. By the way, I've been coughing a lot. I have meds right now for bronchitis, so hopefully that clears it up the next 2 days, and I stop coughing on Sunday videos because it's getting a little annoying that it's been happening since COVID. So, and that was in December, about 3 months ago. Last but not least, front side, embrace the trace, and what are you losing focus? Those were the last couple of notes that I had. Just reiterating, be careful on the front side. You just saw it, BCEL is a bio company that was trending, another one that I missed, but that's okay. It's okay to miss these things. What you do with after you miss is really, usually what costs people money because they're upset. They're, mad that they missed the trade. So then they chase it. They make a really bad decision, and then they, turn into a monster loss or just a really poor decision. So it's okay. I miss these things. I'm not worried about that. But just make sure you've seen the warning shots, right? I call them warning shots. And so you've been warned that we are in this market where it can rip your face off if you step in front of these thin names, sector related. So you have those warning shots, take them or leave them, but you know, it's your money, not mine, and be cautious on the front side. Brace the chase doesn't mean just go crazy and chase everything, but understand that there are markets and themes and sectors that will continue to compound and compound and compound until the main thing, such as crude, settles down. And crude continues to slowly build. And that slow build will create exponential moves in the small caps in that space. So just keep that in mind. And don't be alarmed if, you know, the flush comes like IMPP. I was getting at this point earlier. I don't remember if I made it or not, but it's building and building and building, and everybody wants, you know, from a short perspective, well, it should be 150. You know, it should be fading back there. Yeah, that's going to take like a month, 2 months, 3 months potentially, right? It's just going to be that slow, steady, because what it's doing is building a market at a higher level, and the float continues to churn and churn and churn and churn and build a higher base. So typically, it takes a long time for that to just reverse, and it doesn't just happen overnight. There might be that one day where it just slams down, but it's going to consolidate. It's got a real market now, real market participants, a lot larger shareholder base, which means that the pace at which it's going to fade is, you know, typically much slower unless there's an event that happens, such as a raise, bad news, something like that. And then last but not least, where are you losing focus? One of the main things that I said every single morning in the Traders Lounge and on the broadcast was INDO, take it off radar. And everybody wants to trade that. And, you know, trust me, that was like 2 years of my life where, you know, it's whatever's running the most is, you know, you just, boom, that's your focus. But is that an edge? Is that worth it? Is that something that's going to make you not necessarily even wealthy or rich over time, but is it something that's going to make you consistent over time? If that's all you're focused on is, you know, whatever the crazy one is, right? You need to find something that's going to be consistently profitable for you. And in my opinion, those are the types, it's just like trading after hours for me, right? Where you nail. You can nail 7, 8, 9 times out of 10, but it's that one time that it dips and it dips again. It looks great. You start to scale in and it dips again. And it completely takes away those other, you know, 7, 8, 9 times that you were right. So even if you're right 70, 80, 90% of the times on a little scalp after hours, in my experience, it's always that one that will take it all back. And that's similar to this INDO where, you know, it's fine to scalp them here and there, and you just have to watch your size. But in my opinion, your time is better spent on something with better edge. So think about that if you spent a lot of time trying to trade INDO last week and how much time was wasted. So I think that's it. Let me just double check if there's anything else. No, I think I got it all. So we'll get into scan for the week ahead. All right, guys. So as always, I'm not a financial advisor. These are not buy or sell recommendations. This is for educational and informational purposes. My goal is to show you how I prepare to be able to make the decisions that I make to form the bias or the conviction on particular trades, and kind of show you, you know, what makes a good trade versus, you know, maybe just a mediocre one. My goal is always to trade the most liquid opportunities intraday. And, you know, that's really what it comes down to. I'm not interested in just having little small scalps here and there. I'm looking at more of a macro perspective, or, you know, how do you get the most out of a particular ticker, letting that trade work for you. However, in this market, you have to kind of have your guard up, because even if you're on the right side of the trade, there's a lot of chop. There's a lot of directional changes throughout the day. And, you know, despite my goal to let things work, you have to know, or at least respect, when the trade starts to shift trend. So An example of that is something like X and CLF on Friday, which we'll go over. I had some fantastic trades on them, but had I not covered, it would be right back to, my entry. And it had a nice fade, but it climbed right back up. And it all comes back to the theme that we talked about, whether it's steel, aluminum, gold, oil, in the case that we were going over with COVID and virus names, things like that. Doesn't matter what it is, but if there's a sector base, there's always going to be this underlying demand, which will come back and soak until something about that either commodity or theme sector changes. And right now, oil, for example, we should expect that there's going to be an underlying demand until we figure out what's going on with this war. So IMPP, this was fantastic. You guys, this should not be a surprise to any of you that watched last week. So you guys know that I was long 74, 78, 80s, and so on and so forth, and kind of scaled into that trade. I actually had quite a bit. It was a phenomenal trade. I was really happy with the sells. I got some great sells on, I don't even remember which day it was, but it ended up coming way into 145, so I felt really good about it. And I did actually have a goal to rebuy it, and you know how it works. You can have the best goal in the world, and you can still screw it up, just like INDO, which I'll go over in a second. But you can see that it came right back into this 140 area support, looking left. Yeah, in hindsight, shoulda, woulda, coulda, I should have done that, but that's okay. And if I beat myself up, the fact that I missed, rebuying it over here, then I would have missed this opportunity Friday. And so we had a nice breakout over that prior level of resistance, the 260s, and then again over that 280 level was basically blue skies. Here we go. And it was very nice. To me, it was, you're risking 20 cents on a highly sought after sector right now. And, oil, energy is going to be, it's going to have that underlying bid for quite some time. And even if it pulls back, for a day or two, there's still going to be that underlying demand in the short term at the very minimum. So that said, I didn't forget anything that I said last week regarding the 350 to 5 as very, very much potential if this thing, continued to hold trend. So then when I saw it set up, I went for it. And like I said in the room, it was a gapper idea for potential overnight, and I was thinking that 350 to 5 is reasonable if this trade were to play out. And we almost got that after hours. Went to about 4, I think it was 4:30 or so. 4:30 twice. And so I exited some 410, 420s, but for the most part, I'm letting it work because do we open at 5, 6, 7? Do we open at 370s? I don't know yet. But from early morning into 7 a.m., just be cautious that you get conviction of that fade, because there's been a lot of times where, on AMC and Clove, they do this big gap up. They let shorts just fade it into 7 a.m. and then they swipe it back up. They let shorts fade it, and then bam, by open, it's back up to the highs. And really all those sellers were just shorts pre-market, and then they fuel that next move. So you want to be cautious of that. You're not going to miss this trade by not touching it pre-market if you're looking for the short side. So again, currently I'm still long. I also took, participation in USEG and MARPS and CEI. CEI is one of those where, it starts to check those boxes and, it starts to go, it's holding trend. People see it over 80, 85 cents, and psychologically the next target in their mind is obviously, a dollar. So whether or not I make it there, whether or not it gaps up, we'll find out. But point being is you got to think about how people's minds work, and that on a Friday, if it closes strong over the weekend, everybody on StockTwits is going to be calling for a dollar, right? So we'll see what happens. But again, it's a sector trade for me. I'm a trader on them. I'm not looking to invest in, maybe I sell them too soon, but all of those, if they go nuts, then obviously I'm a seller like always, and I'll be trading the trend as they progress. And then last but not least, again, you can have the best call in the world, but if you still could fumble it. And so we went over this all Friday, and as far as leaving it alone and understanding that we're in a basically a channel here, and if it starts to break out of that channel, obviously you have the potential of an outlier move. So we went over these key levels in the room. The only sentiment shift area was that 2750 level, and until then you should feel threatened if you're on the short side. So nice exhaustion move, parabolic, and ended up holding out pretty well. So at this point, like I said on the scan the night before, or 2 nights before, thinking 35 to 40. The reason for that is perpetual squeeze, where you short in the morning, and that's letting somebody else basically cover, and that short trade is continually getting kicked down the can's getting kicked down the road until eventually you get that unwind process, and it absolutely explodes. So OXY, USO, both looking for reactive type trades, big gap up, some type of parabolic. I would feel more comfortable with OXY just because it's a company as well. It's not just an ETF. So I think that it's a little bit more beneficial to trade something like OXY, whereas USO might be a little bit more aggressive with headlines, and I feel like OXY is a little bit more forgiving on the reactive trade side of things. So if you do see some sort of exhaustion move like I did on Friday, the 2 times that I faded it, it was a nice yank and pullback. But something like USO, it can pull back, but the liquidity might not be there. And so for me, I would prefer to trade something like OXY if and when it sets up. That said, if it does unwind and catch $1, $2 fade, just remember, just like X and CLF, had fantastic trades on those. But if you look at the intraday chart on CLF and X, after those huge unwinds, from the morning into about 11 a.m. and same thing with CLF from 26s down to the 25s, fantastic, good risk reward type trades, any size really that you were comfortable with. As soon as they stop going down, they start to float back up. And I feel like the same thing's going to happen on OXY. Failed follow through. So failed follow through section is the spots. It's not necessarily just a short, but I'm looking for more rebounds, more strength, but as it fails to follow through, has some type of exhaustion move, hits a wall, starts to break away from a key level of resistance, that's when I start to get interested in it. So BCEL, I think, you can kind of see that it's stuck in this 450 to 6 range. So higher the better, reactive trade off of that 6. Careful, might be thin over 6. And then I feel like the sentiment shift will be under 450s, where the squeeze is probably done and it starts to kind of just fade off. So there's going to be a lot of tug of war in between these 2 levels. Reactive trade, looking for people to try to find the top, squeeze them out, and then I'll look to come in at some point. X and CLF, same deal. Higher the better, looking for a fade. Looking for that daily trade until they start to tighten up trend. So right now, when it does, a lot of this, there's going to be a tug of war like this, or you're going to have that either steady fade or steady grind day because of the move that they're, having right now. We're up against key resistance on the daily, so that's all going to play into a trade, and we're going to keep on probably testing that top until we either break down on news or we have some type of breakout move through it, in which case we'll have another $2 or $3 type move. AMC and MU, same deal, all higher the better. We've been talking about AFRM, RBLX, RIVN. This was an idea for 45 to 48, and I think we got almost there. We got to 47s, but we're just in a capitulation style of all the hot IPOs, all the hot 2020, 2021 names, and it's just completely unwinding. And there's the bottoming process takes a while. There's going to be a flush out, a rebound, a flush out, a rebound. And when you think it's about to bottom, it's going to go lower. So don't get into that habit of just, buying because things look cheap. These things still have crazy, crazy, crazy market caps. Continuation side of things, CEI we went over. I feel like everybody's going to be thinking one magnet. Maybe right, maybe wrong, but volumes there, 200 million almost on Friday. So there's a huge audience, and there's always been a big audience. So again, we're only back to basically where people were about a month ago or so. It's kind of come down on low volume, and then we've got this volume kind of cleaning it up. So we'll see what happens with that. CYRN, I participated because of the liquidity trap that we've talked about. So we've got this huge move. This day I feel like they caught shorts, and then you can see each day they keep on absorbing. There's a candle that kind of saves the day and shows that there's a buyer in the tape and they're not exhausting. Huge move, came back, and then all of a sudden we're back again. So you can see we're up against resistance. You should assume that it's going to fail. But if and when it does break out, just like you saw on INDO, right, you assume it's going to fail. But if it starts to go, that's when the outlier move comes. Last but not least, PSTI, another one that I've been trading long. We went over this as a liquidity trap setup back on that move. But you never forget, right? So you had this huge volume exchange. Somebody came in, and it's kind of held trend since. And now, really the key is going to be that VWAP level 225 sort of trigger. So assume it's going to fail, but if it gets over 225, you might have that outlier setup. So see what happens, but I'm glad I've finally been putting things in the IRA again with, kind of letting some of these moves work. Not big cap names, not big names that, you would think like, a Ford or Lucid or Tesla or anything like that. I'm not ready to swing the market yet, but oil type names I've been throwing in there. As you guys know, obviously I went over IMPP last week. So I wish I put INDO in there. I didn't. It is what it is. But like I said, the worst thing you can do is kind of get aggressive because you missed it, and then lose it on something else. So same deal. BTU. Think about doing a research kind of hour. 30 minutes or an hour this weekend, and find all your energy and your oil type names that interest you, the ones that are having those outlier moves, the ones that maybe are, about to move. And if and when the time comes that things pull back, you go to your huge outlier moves, because those are going to give you the outlier returns when they do come back in. So it's always good. I put a couple of my favorites on there. Couple of them, I have positions. I already mentioned the ones that I have long, but other than that, that's what I'm prepared for. And again, it's about waking up and coming prepared, not trying to overdo it. Trying to overdo it, you're gonna miss. But my goal every single day, I'll give you an example of what I missed on Friday. But my goal every day is to catch a nice, clean, steady move like MU, where you can scale into the trade, scale out, let the rest work while you're trading other types of names. So you saw me short on RIVN. You've seen the kind of game plans on AFRM and RBLX each day. But sometimes the shiny objects do take front and center stage, and you end up missing them. So I missed a couple of those. Usually I'm pretty good about not letting that happen, but I definitely did miss a lot of big layups on Friday, which I will work to be better at on Monday. So that's that. I hope you guys all have a great rest of the weekend, and we'll see you in the room tomorrow.